London, world stocks hovered below record highs on Friday, set to reverse 2 straight weeks of losses while the euro hit its highest levels in 6 weeks following stronger than expected economic data this week. The MSCI World Index, which tracks shares in 47 countries, rose 0.1% and is set for gains of more than 1% this week. Its climb was underpinned by gains in Europe and Asia. The pan-European STOXX 600 index was up almost 0.5% by midday in London. Wall Street futures indicated a positive open. Along with surveys this week that showed Europe's services and manufacturing industries outshining the most optimistic forecasts in Reuters polls, the growing prospect of a grand coalition in Germany boosted sentiment around European equities. Germany's Social Democrats are ready to hold talks with other parties on breaking a political deadlock created by Chancellor Angela Merkel's failure to form a three-way coalition government, a senior member of the Centre Party said. There's a lot of impetus there to resolve the situation without recourse to another election, Ken Adeluga, market analyst at Citi Index, said, adding that an easing in the euro's ascent was also supportive of German equities. For Reuters Live Markets blog on European and UK stock markets, see Reuters/realtime/verb=open/URL=http://emea1app/cp extranet Thomson Reuters biz/cms/ page ID =live markets. The euro touched its highest point in 6 weeks at $1.1875, up 0.1% on the day and on track to mark its third consecutive week of gains. MSCI's broadest index of Asia-Pacific shares outside Japan was up 0.2%, as Hong Kong shares bucked the softness in mainland Chinese shares to gain 0.6%. Stocks in mainland China dropped to 3-month lows after big falls the previous day on concerns about fresh government steps to curb financial risks and rise in Chinese bond yields. Japan's Nikkei ended up 0.1% after a market holiday on Thursday, while U.S. stock futures were little changed after shortened trading on Thursday. In the currency market, the U.S. dollar remained under pressure after minutes from the U.S. Federal Reserve's latest policy meeting highlighted concern among some of the board members over persistently low inflation. The index that measures the greenback against a basket of peers was 0.2% lower. A weaker dollar saw the British pound staying near a 6-week high, poised to post gains for a third consecutive week as markets interpreted the latest comments from top EU policymakers as mildly positive for Brexit negotiations, though gains were capped. China concerns. Although solid global economic growth and strong corporate earnings have underpinned shares in Asia and many other parts of the world, a tumble in mainland Chinese shares caught some investors' attention. The CSI 300 index fell as much as 0.9% to a 3-month low in choppy trade after a 3.0% fall, its biggest in almost a year and a half, on Thursday, as a sell-off in domestic bonds that has been underway since last month gnawed away at investor sentiment. In late trade, the index was almost flat.